Hello, students. It's your teacher, Mr. Todd. Actually, friends and family, hi, it's Danny, DT, Daniel, whatever you want to call me. Just don't call me late to the NFT party. Actually, I don't really own very many NFTs. I'm not really into that part of this whole game. But what I am into is making money. Not in a greedy way, but in, hey, why are we working so hard, but we don't feel like we're making it? We're not getting ahead. If you're wondering the same thing, then I'm definitely here to help you because we're making strides and we're having fun in this investment game. It hasn't been easy and it's required a lot of time and sacrifice, but I am very excited about the gains we're making and about what's happening right now and what's going to be happening in the next few weeks, months. The next year and a half is going to be wild. So let me jump in and explain why I'm even doing this. Number one, a couple of years ago, it really started to feel like, wait, we played by the rules. You don't have to go to college to get ahead. But Sarah and I both went to school, incurred debt, went to college, got good jobs, even management jobs making a nice salary. Of course, we own our home. We're very blessed, as we like to say. Feel very grateful for what we've earned, for all the people who've helped us along the way. However, why in the world are we working this hard and we've made it this far and we feel like sometimes we're living paycheck to paycheck, or we're concerned about how we're going to help our kids in the future? We want to go on a nice trip to Europe. We'd love to take my kids to see Italy. Can't really afford that. So what gives? We're following the rules. We're doing it all right. Well, in the end, it's not really our faults. The dollar's worth, the purchasing power of the dollar has been steadily declining. And the amount of money printing the government's engaging in is out of control compared to what it was even 5, 10, 15 years ago. So with that said, I personally went on this journey jumping into the stock market because I thought, gosh, we've got to make up some ground. The promise that was made to us by the government and by the previous generations isn't really coming true. Look at my parents. Also, they've made good financial decisions. They're responsible and they're doing fine, but their purchasing power, the amount that people can do on fixed incomes, it's diminished a lot. And so we have to take action at as young age as possible so as to combat the inflation, to really protect ourselves and our families from monetary debasement. Basically, when countries get a little older, longer in the tooth, the middle class shrinks. There tends to be a larger number of people living in poverty. And then you have this elite class that's kind of running the show. And I think that's the government elite, bankers, the top 1%. They are stingy. The amount of money being distributed in our country is no longer anywhere near what it used to be. So with that said, look at this image. I'll just read a couple key things. Back in about just after 1930, the U.S. President Roosevelt criminalizes the possession of large amounts of gold. The Bretton Woods Agreement establishes the gold standard, but then right before I was born, a few years, the gold standard is abandoned and currencies are no longer linked to gold. That was the beginning of the end. Then we had that quantitative easing begins right after 2008 in response to the financial crisis. Instead of actually fixing the problems, we just bailed out the elites and said, you know what, let's just keep doing it. And then 2020, the U.S. money supply grew by $3.8 trillion in just 1 year, 2020, with all the stimulus checks, stimmy checks, equal to 20% of all the dollars ever created. 20% of all the dollars that were ever created were created in 2020. That is a problem. And that's why Satoshi Nakamoto and the cryptographers, these anonymous group individual, they created Bitcoin in response to that 2008 financial crisis. The bad guys screwed us over and they got bailed out. And one person went to jail. It's not okay. So that's why I have Bitcoin. Okay, so that's the main thing. That's what got me into Bitcoin is what the heck is happening? I've got money and it's disappearing. And then I found out, oh yeah, it's a known thing. Like it's cause and effect. So the other reason we're here is that there's a face-ripping rally incoming. We're actually already in the middle of a face-ripping rally, in my opinion. This is not necessarily correct. It says Bitcoin's up over 100%. It's actually well over 100% this last year. It went from 16K in roughly the beginning of 2023 to $50,000. In fact, these slides that I created are a little bit outdated now. So it just basically says crypto's going up, Bitcoin's blown past $50,000. And now, as Russia's Vladimir Putin stokes fears that Joe Biden is killing the US dollar, one closely watched Bitcoin and crypto analyst has raised his Bitcoin price target, with bullish traders pointing to a perfect storm of factors. The ETFs, you've got the halving, where there's going to be only half as much Bitcoin coming on the market. And then you have the potential quantitative easing. The money printing is going to happen again. It has to. That's the way our government is playing the game. So you've been warned. So if we look at the crypto market cap, the total crypto market cap, I just grabbed this slide this morning, $1.98 trillion, of which 51% of that market cap is all Bitcoin alone. 17% of that is Ethereum. If you look here, Bitcoin is over $1 trillion market cap now. Ethereum's at 3.5 trillion. And then you have Solana down here. I'm an investor in all three of those, especially Bitcoin and Solana. Solana's at $49 billion. Jumping ahead here. So what's going on? That's the question. Well, the ETFs are what's going on. An ETF is basically, it's an exchange traded fund. It's a collection of securities that trades like on an exchange, like a stock. So basically, Bitcoin can be traded like a stock now. The boomers, no offense to my boomer friends and family, but boomers, they don't want to download a bunch of apps and necessarily go through all the know your customer rigmarole and have wallets and potentially screw up and get hacked or scammed. They want to buy it in an easy way. That's what's happening now. And in fact, don't take my words for it. Don't take anyone's word for it. Look at what's happening out there in the financial sector. Over any 4-year period you choose, the combination that's been promoted now by some of these big investment firms is 2% Bitcoin allocation. And that 2% Bitcoin allocation has obliterated the performance of the world's number one performance metric, which is the S&P 500, the 500 most and the largest companies, with 14 times less volatility. Yes, Bitcoin is volatile, but if you look at the stock market, it's volatile too. And then if you look at Bitcoin's price history, just a quick nutshell, dollars, maybe a few $100s, and then suddenly it jumps to over 20 grand. That's what made all the initial Bitcoin millionaires, millionaires. Then it dips down again, goes up, dips down, and then it goes on this face melting rally with a double peak. And at about just under 70 grand was the all-time high. When I created this slide, Bitcoin was way back at 40K. As of this morning, if I look right now, I'm going to see that Bitcoin is probably over $52,000. And sure enough, it is at $52,086. So we've gone up $12,000 since I made these slides a week or two ago. Wow, that's what's happening. That's why I'm saying that the boat is leaving, the rocket ship the engines are turned on. This is just a screenshot I took from BlackRock's Bitcoin ETF webpage, introducing IBIT, the iShares Bitcoin Trust. It says the case for IBIT: number one, access to Bitcoin; two, through the convenience of an ETF; three, by the largest ETF provider. IBIT is built by BlackRock, the world's largest asset manager and ETF provider with a history of innovation. In fact, thanks in large part to IBIT, this BlackRock fund, Bitcoin's market cap is about to surpass that of silver. Silver's been around a long time. It's talk about a traditional asset being eclipsed by the new digital gold. Wow. So the takeaways that they share, BlackRock, is we're likely to see the Fed rate decrease. We're likely to see money printing happening again. They're going to lower the interest rates. We're going to see a huge run up in the stock market and crypto. I'm definitely cashing out before that bad boy crashes. So they say here, we believe the Fed is likely done hiking rates, though the market overestimates the speed and scope of the Fed easing. They're just saying we're not going to start seeing the money printing until probably May, June, second half of the year, 2024. So Bitcoin price targets. This is what people really like to hear and see, especially if they've invested. It's safe to say that if you combine a bunch of different models, it ranges from 87K up to, say, $207,000. We're going to go ahead and drop it in, say, $143,000. From 50K, that's more than a little bit less than a 3x from our current levels. And I think that's not a bad investment. If you want a 2.5x or 3x your money, triple your money, And Bitcoin's the safest crypto. It's the least likely to tank. I mean, we'll see corrections along the way, certainly, like we always do. It's healthy. But yeah, I think not financial advice, but I would look into, why not allocate something into Bitcoin and triple that amount of money in the next year. So the Tabby model tells us where we are. If you look at the red at the top, that means that it's time to sell. This gives us it's the cycles of the Bitcoin. You see the kind of the double top from the last one. So right now we're still yellow. You want to buy a lot when it's dark blue. You want to buy when it's light blue. You even want to buy when it's green or even slightly yellow. You don't want to buy when it starts getting orange and then of course red. So just to give you an idea, a visual, this is where we are right now. We're beginning to climb up and get into that yellow range. So if you're going to, invest in these assets, if you're planning on it, then you're getting low on time. Not owning Bitcoin will soon become a risk, according to Market Vector's Martin Lineweber. The global effect of a spot Bitcoin ETF, it's really smashing. Let me read you this piece. At that point, he's talking about once Bitcoin's really becoming institutionalized, not owning some Bitcoin and crypto will become a risk. Because if you look at the risk-adjusted returns over a year, especially during bull market, it's the best risk-adjusted return across all asset classes, he said. Then clients will say, hey, why don't I own that? And I'll say, I don't know. If you saw my video or you talked to me, I tried to ask you that already, but I don't know. So bottom line and full disclosure, our average price on Bitcoin is somewhere around between, I'd say, probably closer to $35,000. So I wrote here right about where we are now. Not really, because now it's gone up to 52K. Now our Bitcoin bag is definitely in the green, and I'm holding, as my hat says, I put that up there, hodling. I'm not hodling forever. I don't know how much of our Bitcoin we will sell. We will definitely be taking major profits on the altcoin portfolio. That's going to probably outperform Bitcoin by quite a bit. And Bitcoin is what we want to hold on to, into the 2030s. So yes, I've decided, and I talked to Sarah, we might sell a fraction of our Bitcoin, maybe at the most half or 25% of it. Because if it really has a big blow off top, then it's going to crash. It's going to go from like $150,000 or $180,000 down to 50 or 60 grand again, down to where we are right now. And that'll be the new buying opportunity. That'll be the new bottom for Bitcoin. You will never see the $16,000 or the $10,000 or the $5,000 Bitcoin. Definitely not going to see the $300 Bitcoin again. You never know. I mean, the world blows up and all of the internet goes down forever and there's no electricity, then shoot, we'll have other issues. Even gold, what are you going to do? Give me gold for my water? I'd rather have water than gold at that point. So anyway, side tangent. The price of Bitcoin is still, I wouldn't call it very reasonable. I would just say the price of Bitcoin is reasonable now. If I had made this slide today, I wouldn't have said the word very reasonable. I'm a buyer at 45K or lower for sure. If we see dips into 30,000s, I'm going to back the truck up and try to talk Sarah into let's just buy huge tranches of it. We don't have enough Bitcoin. That's the feeling I have. When you understand Bitcoin, you know you need some. And if you don't buy soon, it may be too late before long. That's the message I wanted from this segment. So here you go. There's Bitcoin in the corner. This is the monthly asset class returns. So you have down here emerging bonds, the lowest, emerging markets, real estate, gold, commodities, equities. Equities outperform all of that. Remember, equities just means stocks, by the way. When you say I have equity in my house, you have some money in your house. When you're purchasing equities, you're buying stocks and hoping that there's equity, like you get in your house when it goes up in price. Sorry, that was probably too basic for most of you, but so anyway, with this portfolio allocation of 19.4%, ARK Invest presented an extremely bullish outlook. They're saying they would go as high as 19% an allocation. I'm not even doing that. That seems way too risky. But interesting that you have institutions putting stuff like this out there. Now they've invested in Bitcoin, so it behooves them to promote it too. So just be careful, right? What about altcoins? Well, let's quickly go over these 5. I'm going to go pretty fast here because my main point here is that they've already gone up a lot, but they're going to go up even more. And if you're really trying to make some money and you're not interested, in changing the world, then don't worry so much about Bitcoin. Look at these alts. So the one that, little lesson here. Remember, Bitcoin is like digital gold. These other blockchains, they are more like they do stuff. They can build businesses on them. They can run applications, etc. So layer one blockchains are also known as smart contract platforms, sometimes abbreviated as SCPs. And some of the main ones are like here: Ethereum, Solana, Cardano, Avalanche, Link, Chainlink, that is. So layer ones, they are the foundation of a decentralized network. And really, all of our lives are going to be going onto the blockchain because the blockchain has so many benefits for our lives: privacy, peer-to-peer communication, and money sending. Money sending. See, I told you I'm not a professional. Transaction processing is probably a better way to say that. So if we look at the top 9 cryptocurrencies by market cap, you have Bitcoin at the top in orange arrow. You have these $2 symbols. That shows you that these are both stable coins. That means that they just are like digital dollars. If let's say that I make a bunch of money from Solana and I'm scared Solana is going to dip down and go low, so I can just quickly convert that Solana tokens into one of the stable coins like USDC, which is very stable. It's backed and everything. Once I have it in USDC, I can just leave it in there and wait for a dip and buy more and increase my portfolio. Or I can just transfer that to my bank, cash it out as dollars, and go buy a new bicycle or pay for a college tuition payment. Okay. So anyway, if you look here, what's stunning is that of the top 9, 1, 2, 3, 4, 5, 6 of those are layer 1 blockchains: Ethereum, Binance, Solana, XRP, Cardano, and Avalanche. I've held most of these tokens before at different times, but right now I'm highly invested in Solana primarily. And I took profits probably a little too early on Avalanche, but I made some money this year on that as well. So anyway, those are smart contract platforms. So Solana, I am a Solana fanboy. Why? Because it works. I use it in DeFi, decentralized finance. I use it. I trade things in and out of it. The fees are extremely low. It is amazing. Visa's partnered up with them. I think PayPal, Shopify, they are able to do things that these credit card companies can't do for both sellers and buyers online. It's a really amazing product. And the price prediction, it went from about $10 to currently now it's at 100 plus, so at 10x. And we expect it to go to 350, and that's a conservative price target. Some are calling for $800, $1,000, $500. I say be careful with that kind of hopium. You don't want to smoke hopium. I hope it goes that high, but I'm going to go ahead and keep my feet on the ground. That's by December 30th, 2024. That's a 3x from here. So I think Solana is pretty safe. I think it's a pretty safe 3x. Not financial advice, do your own research, but I like it. I use it. I own it. And I think I'm going to buy a Solana t-shirt this week. Yeah, Sol's at about 100, could dip to 60. I doubt it. I think anything around $90 is a good buy, $80. If we see Bitcoin have a major correction down to like low 40s again, Solana and all these other assets will dip hard, and we will buy more because we know it's going to go above 250 this year. Solana, no brainer. Okay. Render, this is the only slide I have for this one. Render is a decentralized GPU platform. Companies and businesses will need AI applications. They will need to build, write code, or shoot, AI can write code for them, but they're going to need processing power, and they can rent that out from Render virtually, and they don't need to have a bunch of computers and servers. It's amazing. I bought Render when it was like under $2. Right now, I think it's around $5 or $6. Very happy with the 2 or 3x on that. I think just for full disclosure, I put in like maybe $2,000 and it turned into $6,000. And then with those profits, I just purchased other small cap AI tokens that I think will have even bigger returns. They're more risky, they're less sure, but now I can take my baby, take my Render money, and I can plant other seeds out there in the ecosystem. And even if just 1 or 2 of those hits, cha-ching. But yeah, Render is legit. That's the symbol for it. It's RNDR, the ticker. Chainlink, it is kind of the pick and shovel. Let me jump to this other slide I have. With all of this blockchain technology being integrated now into business, there needs to be some sort of pick and shovel plays. It's like all the people that went and tried to find gold. Some of them got rich, most of them didn't. But the guys who sold the picks and shovels, they got rich for sure. And so I needed something else safe in my portfolio that is being adopted by institutions, that has legit, it's very legit, has a legit use case. It links everything together. It's going to connect blockchains with banks and with real world assets. So it's an oracle for the next generation for Web3. So I just saw this headline today. I thought I would share as well. Mysterious institution accumulates over $216 million in Chainlink. They will be selling that when the market gets frothy and exciting. When the number goes way up, I will also be selling my Chainlink. At least 80% of these bags that I'm talking about. I'll let 20% ride and see how high it goes. Ethereum, we talked about it. It is the first biggest layer one smart contract platform. The question is, will Solana eclipse it? Will Solana end up having more market cap? I'm kind of thinking not. I think they coexist. Maybe they're both equally as big. We will see. But I am not as invested in Ethereum anymore. I'm more invested in projects that support and connect to Ethereum, such as Arbitrum. I don't own Optimism, but Optimism is a good example. Those are layer twos that I won't get into all that. It's too much. But there's also layer twos. They help these layer ones function, and they create different kinds of functionality for them. So this is a little dated, but this, thanks James from Invest Answers, you can see that Bitcoin, the least risky, Ethereum, Solana, and then LinkedIn right there, or that's Polygon, and then LinkedIn, as you go up that risk curve and you start getting into these crazy meme coins, baby Dogecoin, your chance of making a lot of money is quite high. I'm sorry, the amount of money you can make is quite high, but the chances you're going to make that money is not very high. So I'm going for high conviction, safer plays. Some people think this is all extremely risky, and they're not wrong. These are risk on assets, just like the stock market. But you can't usually get big returns without big risks. It's just the way it works. I want to end where we started. The dollar is losing its purchasing power. You could buy, just in my lifetime, born in 1978, I can't believe just how much more expensive everything is. Housing, of course, the earnings have gone up, but that's because the money printing, because of debasement. So I want to make the world a better place. I want to support my family. I want to help educate people. I'm extremely excited about this whole blockchain revolution. And if you put the right chips on the table, you can walk away with potentially life-changing money. I'm not trying to make millions of dollars. Well, I would love to make millions of dollars, but if we can walk away from this year with enough money to, be more comfortable, to be able to help our kids with college, to maybe get a new car and get rid of our minivan that's getting a little bit older, and maybe get an electric vehicle, save money. Also, we want to travel. We can't do those things as hardworking, whatever you want to call it, middle class people, professional middle class workers. I expected to not be so strapped for cash, and I have a feeling that you and many others feel that way too. So it's not just about trying to get rich. It's about trying to create more fair, equal playing ground. Let's not let the middle class get squeezed out. All right. Bitcoin to the moon. Wishing you guys all a great week. Happy President's Day. Thankful for the great people who've ended slavery. Abraham Lincoln. The more I read about him, the more I look back at some people want to vilify all of the founding fathers, but the fact is they pushed hard along the way to abolish slavery and to fix things and make this country a great place. So I hope that Bitcoin helps our country. In the long run, I think Bitcoin is good for America, but we're going to have to pay the price for some of the crazy stuff that's been done. And I believe by buying Bitcoin in particular, you are cushioning yourself. It's insurance against the fraud that's been perpetuated against American people. All right, I'm going to end it there. Bye.